Prepare to see the electric giant Tesla come to prominence. Tesla is putting everything on the line in an attempt to transform the automotive industry, with aspirations to produce 20 million units by 2020 and break into the general market. However, the firm isn't simply focused on electric automobiles. The business is also making significant investments in renewable energy, and megapacks will soon be produced at a new plant in Shanghai. Regarding Tesla's foray into the energy storage sectors, the future appears bright. We'll examine Tesla's ambitious aspirations in this video. Now that we've covered the advantages of Tesla's new factory in China as well as how the firm is beating out the competition, let's dive deeper into this fascinating future of Tesla. First things first. If you haven't subscribed to our channel yet, do so now. Also, don't forget to give this video a huge thumbs up at the conclusion. With plans to produce 20 million vehicles by 2020, Tesla has big goals. That would give them a staggering 24% market share and position it as the leading automaker. They have outlined a plan of action for reaching this challenging objective, which involves a 50% cost reduction. This will allow them to break into the mass market and take up 50% of the market. They intend to achieve this by reducing general assembly and powertrain batteries in order to save expenses and enter new markets. They intend to establish a new facility in Mexico's Nuevo León. In addition to the advantages of being in Mexico, this location offers a number of advantages, including as access to a skilled labor force, lower labor prices, and close proximity to significant trade routes. Additionally, Tesla is eligible for the 75,000 IRA credit. This tax credit, which can assist defray the cost of purchasing a Tesla by having the car manufactured in Mexico, is offered to American consumers who purchase electric vehicles. Tesla is able to keep its credit eligibility and pass the savings forward to its consumers. The fact that Mexico has multiple tariff accords with Latin American nations due to its export of automobiles from its new Mexican facility is another advantage of doing business there. By taking advantage of these agreements, Tesla will be able to offer its products to consumers in Brazil and other Latin American nations for less money. Overall, it looks like Tesla made the right decision to open a new plant in Mexico. By utilizing cost savings and reaching out to new markets, they are positioning themselves for future growth and success. As a result, many investors are feeling optimistic about the company's prospects and confident about its performance going forward. At Tesla's recent Investor Day, the company displayed a new level of management. With 1.3 million orders, the Cybertruck is coming this year. If they can launch it this year and produce 200,000 units next year, that's worth around 40 cents a share. Talent was pretty reassuring since it's not just an Elon Musk firm. Tesla has made a name for itself as a manufacturer of high-quality electric vehicles, EVs, but they're also making solar panels and batteries that can store renewable energy, which is crucial for the switch to clean energy. In order to maintain its low-cost EV production, Tesla has implemented new policies and invested $5 billion in a new gigafactory located in Mexico. Their energy division, which generates and stores energy valued at $801 million, is another development engine. Certain analysts hold a highly optimistic view of Tesla's energy sector, viewing it as an underappreciated potential catalyst. An investor in Tesla, Gary Black, projects that by 2023, Tesla Energy would generate over $20 billion in sales and a substantial $8 billion in gross profit. The future is bright for Tesla, and investors shouldn't pass up this chance. Kanakogi Tesla was commended by Annuity as a sustainability the company's robust balance sheet allows it to weather any prospective recession. Behemoth pointed to their solar and energy storage technologies, their electric vehicles, and their leading position in both categories, according to Annuity. The company's future was bright. With a large selection of solar and energy storage devices for clean energy applications, Tesla is putting more and more emphasis on renewable energy in general. A factory to create their Megapack batteries will be built in Shanghai, they just revealed, entering the Chinese market at a time when tense US-China relations. Construction on the new facility is scheduled to begin in the third quarter of this year, with production beginning in the second quarter of 2024. The factory will make 10,000 units annually for global distribution. China ranks as Tesla's second largest market, contributing almost 25% of the company's revenue in 2022. About half of the company's global automobile deliveries come from their Shanghai auto facility, which exports cars to Europe in addition to serving China's domestic auto market. A crucial component of Tesla's worldwide expansion strategy has been the company's performance in China. China is the largest automobile market in the world, with a population of over 1.4 billion people, and as such, it offers Tesla a huge opportunity. In late 2019, Tesla became the first foreign automaker to have a totally owned facility in China when it started manufacturing at its own gigafactory in Shanghai. Since then, the business has been able to benefit from China's significant demand for EVs as well as the nation's initiatives to lower carbon emissions. A major factor in Tesla's growth in China has been its Shanghai facility. The company's most well-known automobiles, the Model 3 and Model Y, are made at this plant. Tesla has been able to escape China's high import taxes on foreign-made autos by producing these cars domestically. Not only has Tesla met local demand, but it has also increased its market share in China's EV industry, which is already the largest in the world, by making its cars more cheap for Chinese consumers. Exporting cars to overseas markets is another responsibility of Tesla's Shanghai factory. The factory shipped more than 30,000 Model 3s to Europe in 2020, which increased the business's overall sales volume. This has given Tesla access to China's extensive network of trade deals with other nations and allowed it to benefit from the country's competitive labor costs. Overall, Tesla's expansion has been greatly aided by its success in China, which is expected to continue to be a vital market for the business in the years to come. Many provinces are requiring new solar and wind farms to have enough batteries to hold a percentage of the electricity they generate. This is creating new prospects for Tesla's energy storage products as a result of China's growing demand for grid storage batteries due to waves of blackouts in 2021. In case you are unaware of the potential significance of this for Tesla, be sure to keep a watch on things in the upcoming months. Press that like button because the company's future expansion into the renewable energy and battery storage areas appears bright. To be informed about everything Tesla is doing, subscribe and enable notifications. Returning to the subject at hand, the installation of electricity storage systems has resulted in a massive increase in the global demand for energy storage. Both the manufacturing of rechargeable batteries and the chemical reactions required to produce their constituents are dominated by China. Megapacks, which have the capacity to store enough energy to run 3,600 houses for an hour, will be produced at Tesla's new Shanghai factory. This kind of battery is the best option for storing solar and wind energy for later use because it is affordable and suitable for utility-level power storage. With only 5% of its total revenue coming from energy generation and storage, Tesla's commercial revenue is comparatively tiny. But as utilities switch to renewable energy, having the capacity to store electricity for use in times when it's not needed becomes essential. Elon Musk unveiled Tesla's second phase of its master plan in 2016. This phase involved developing self-driving capabilities that are 10 times safer than human driving, expanding the range of electric vehicle products, and building solar roofs with battery storage. For a number of reasons, Tesla decided to locate its new manufacturing in Shanghai. China is a great place to increase output and cut costs because of its dominating battery supply chain. In addition, many American businessmen are hesitant to make investments in China due to the escalating political tensions between the two nations. Despite fierce competition from domestic businesses like Warren Buffett's, Tesla will be able to meet the growing worldwide demand for energy storage thanks to its new factory, which will capitalize on China's battery supply chain. As listed by Xpeng and NIO, with the opening of a new Megapack facility in Shanghai and an increase in output at their previous replant, Tesla has dropped the price of its cars and provided incentives to customers. Tesla wants to maintain its competitive edge and satisfy the global need for energy storage. Elon Musk recently declared via Twitter that the Tesla Megapack plant in California will see an increase in production thanks to the proposed Tesla factory in Shanghai. The Chinese government and the Biden administration have been pressuring businesses to make investments in cutting-edge technologies. In order to fulfill the rising demand for electric vehicles, President Biden signed the Inflation Reduction Act into law, which offers incentives for the production of rechargeable batteries in the U.S. The supply of batteries will need to rise significantly in order to meet Tesla's ambitious goal of selling 20 million cars annually. By the end of the decade, however, cost restrictions must be put in place throughout the supply chain, particularly for batteries, in order to produce genuinely affordable electric automobiles. Simon Moss, CEO of Benchmark Mineral Intelligence, thinks that Tesla has a clear route to growth if Musk can lower battery costs. However, if Tesla is unable to lower battery costs, rivals are keen to take market share. How do you feel about this development? Please share your thoughts in the space provided for comments below. Don't forget to provide your Tesla valuation. Check out the following video that appears on your screen to stay updated on Tesla's recent activities.